All right, guys, so let's talk a little bit about market structure. I'm going to take you to the charts and show you a live example of the theory behind it. Just a drawn out example, not a live example, I'm sorry. Just the theory behind it. This is very textbook, guys. So mind you, when you do go on a live chart, it is going to look very different, but this is really all it is, guys. We want to be buying in a bullish market and we want to be selling in a bearish market. And market structure is basically the points in that bullish market, the turning points in the bullish market. So at some point in time, there was a high here, and in a bullish market, since we're going up, this impulse move that broke above this high right here created a new high. So this becomes a higher high. The pullback after the expansion, and after the pullback ends with the new impulse to the upside, makes this a higher low. Why is this a higher low? Because at some point in time there was a low here. If prices trending up, is going to make new higher highs and new higher lows. So higher low, break above, impulse to the upside, breaking the last high, making this a higher high. Why is this a higher high? Because it's higher than this high. Pretty self-explanatory, very simple, guys. Pull back, higher low. Why is this a higher low? Because it's higher than the last low. Pullback ends, we get a new break of structure above this high with a big impulse, higher low, and creating a new higher high. Same example, same theory goes behind a bearish market. Bearish market, we want to be selling. Bearish market is going to create lower highs, lower lows. So why is this a lower low? Because it's lower than a previous low at some point in time. Why is this a higher high? A lower high, because it's lower than a previous low, lower high. Price breaks to the downside, creates a new lower low. Why? Because it's lower than this low. Pulls back, continues, and breaks. How do we know this is a lower high? Because it's lower than this high, and this lower high right here was the one that broke below this lower low. When can we identify or change bias? When price decides to not pull back or break structure below, price breaks above this lower high, creating a new higher high. Pulls back, creates a turning point in the market, breaking structure once again to the upside. Now this becomes a higher low. Why? Because it's higher than this low right here, creating a new higher high. So that's just the theory behind it. Obviously, it's very textbook. When you go on the live charts, it's going to look a little bit different. It's going to look a little messier. It's not going to look as clean as this, obviously, guys. However, once you adapt and train your eyes to see what you need to see, it'll become easier with time to understand market structure and where you can mark your turning points, your higher highs, your higher lows, your lower highs, your lower lows.